I was flipping through channels the other night and landed on a classic episode of Pawn Stars. Someone had just brought in a massive collection of 1990s baseball cards, expecting a huge payout. Then Rick went on a classic rant. Not about the cards in front of him, but about the great baseball card bubble of that same era. He talked about overproduction, speculation, and how everyone thought they were holding a lottery ticket. As I listened, it felt eerily familiar. It sounded exactly like he was talking about where we are today with Bitcoin and the broader cryptocurrency market. It's a story of hype, hope, and a whole lot of people hoping someone else will pay more for their collectible tomorrow. Here's what Rick had to say.
So these are action-packed,
Yes,
and they're 1995.
right. Action Pack actually went out of business in 95.
And that's when the sports card bubble just, I mean, it didn't blow up. It was like a nuclear.
For the whole lot, I'm looking to get 120,000.
This is interesting. So these are action-packed,
Yes,
and they're 1995.
right. Action Pack actually went out of business in 95.
And that's when the sports card bubble just, I mean, it didn't blow up. It was like a nuclear bomb. In the 1980s, baseball cards started becoming really, really collectible. Next thing you know, different sports card companies are opening up everywhere, and it's no longer just baseball, it's football, it's basketball, it's hockey, it's every sport you can
Right.
imagine. Everyone thought they were going to get rich. They were going to retire off baseball cards.
Right.
But when you start getting these crazes where everyone's buying them because they're going to be worth a fortune and they're going to resell them, that's not collecting, that's speculating.
It's uncanny, isn't it? This brings to mind a thought I keep having. I'll never understand crypto hypers. If I truly believed something I was speculating on would skyrocket, especially at the rates they expect, I wouldn't be on social media hyping it up. I'd be offline, working to make more money so I could buy more Bitcoin. But most don't. They just talk and hope. And then talk and hope some more. Sounds less like a strategy and more like marketing or insecurity. If you've ever felt that the crypto craze feels more like a high-stakes gamble than a sound investment, then let's explore just how deep the parallels with worthless cardboard really go. 1. The myth of manufactured scarcity. One of the core selling points of Bitcoin is its supposed scarcity, a hard cap of 21 million coins. This sounds valuable, just like the limited edition and rookie card labels that drove the baseball card frenzy. The problem? While a specific card might have been limited, the card companies just printed millions of other limited cards, flooding the market. Similarly, while Bitcoin might be finite, there are now over 20,000 other cryptocurrencies, all competing for attention and capital. This endless sea of altcoins and meme tokens fundamentally undermines the scarcity argument, proving that a digital asset can be created out of thin air with a few lines of code, diluting the entire ecosystem. 2. Speculation disguised as investment. Baseball cards have virtually no intrinsic value or utility. They are small pieces of cardboard with a picture on them. Their worth is derived entirely from what the next person is willing to pay for them. Sound familiar? Bitcoin's utility as a daily currency is, after 15 years, still negligible. It's too volatile, transaction fees can be high, and it's simply not accepted by the vast majority of businesses. Therefore, its price isn't driven by adoption or use but by pure speculation. People buy it not to use it, but with the singular hope of selling it to a greater fool for a profit down the line, which is the very definition of a speculative bubble, not a long-term investment. 3. The hype machine runs on hope, not fundamentals. The baseball card market of the 90s was fueled by price guides, hobby magazines, and word-of-mouth hype, promising that your collection would one day fund your retirement. The crypto market has simply digitized this process. Instead of magazines, you have social media influencers, celebrity endorsements, and endless YouTube channels promising 100x gains. The narrative is always focused on getting in before the price moons, creating a powerful sense of FOMO, fear of missing out. This constant marketing is a massive red flag. Solid investments with real-world value don't need a 24/7 hype cycle just to maintain their price. 4. The barrier of artificial complexity. In the card world, a whole industry of professional grading services emerged. Suddenly, it wasn't just about the card, it was about its PSA or BGS grade. This added a layer of complexity that made the hobby feel more sophisticated and professional, justifying higher prices. Crypto does the same, but on a much grander scale. Talk of blockchain, decentralized finance, DeFi, staking, and NFTs is intentionally complex. This jargon creates a barrier to entry that makes outsiders feel ignorant while making insiders feel like they are part of an exclusive, technically savvy club. In reality, this complexity often obscures the simple, speculative nature of what's actually happening. Betting on a number to go up. 5. The inevitable crash, when everyone tries to cash out at once. When the baseball card bubble burst, everyone who had been hoarding cards tried to sell at the same time. They quickly discovered that the value they saw in price guides was an illusion. There were far more sellers than buyers, and prices plummeted. Collections worth tens of thousands on paper became worth almost nothing overnight. This is the inherent danger of any asset class built on hype instead of utility. When sentiment shifts and the tide of new buyers dries up, the rush for the exit will reveal the market's true and likely shallow depth. Those left holding the bags will own little more than a string of code on a digital ledger. Don't be left holding the digital cardboard. From manufactured scarcity to a market running on pure hype, the parallels between the 1990s baseball card bubble and the modern crypto craze are too stark to ignore. Both promise life-changing wealth based on the idea that what you hold today will be inexplicably worth more tomorrow without any underlying utility to support that claim. History gave us a perfect case study of how these things end, with a few early winners and a vast majority of people left with a worthless collection. Before you get swept up in the next wave of crypto hype, take a step back and ask yourself a hard question. Are you investing in a revolutionary future, or are you just buying a piece of digital cardboard? Share your thoughts and tell us about a time you saw hype get out of control in the comments below. Thanks for watching, and if you found this video helpful, don't forget to like, subscribe, and share it with your friends. Also, don't forget the link in the description.